good afternoon. Happy Thursday. Welcome back to Tips from Elaine's Desk. Elaine Proby here, CEO of Proby's Tax and Accounting and Tips from Elaine's Desk. All right. Hey, Joan Bobbitt. Good afternoon. Good afternoon. Thanks for jumping in. Hey, Rod Smith. Thanks for jumping on here. Hi, bro. How are you? Great, great, great. So you guys, today our conversation is going to be very excellent for a lot of folks who is qualified for these credits. These credits can give you up to $7,000 in refunds, even if you didn't work that much. So we're going to talk about these credits, some tax credits that you can qualify for in 2023. We're going to talk about three of these credits, which mostly a lot of low to medium income folks is with qualifying dependents is always looking forward to filing their taxes and looking forward to getting these credits. So they're excellent. So you guys hit like and share on this video. And so that everyone can get this information. I'm sure everyone is waiting to hear how much they could be getting back and what will qualify you for these credits. Okay, so hit like and share on these videos, guys. Tax credits, we love tax credits. A lot of it is refundable. So this means that's money in your pocket, and it all depends on how much you make. So we're going to talk about that. Okay, so hit like and share this video. Let everybody get this information. So let's jump right into these credits. Okay, so first credit today I want to talk about, guys, is the child tax credit. Now, the child tax credit, of course, everyone was very excited, especially during the COVID, because all these credits were, they really multiplied. They went up by a lot. A lot of folks got a lot of money back based on these credits. But again, for 2023, everything is a little bit more back to normal as far as these credits. So I want everyone to be informed about what these credits are, so they're not expecting a whole lot more money than they really is deserving of. Okay, so we're going to jump into what these credits are. The child tax credit. Hi, Karen. How you doing? Hello, hello. How are you? Thanks for jumping in here. Good to see you. So the child tax credit, guys, is a credit that is given to you for your child under age 17. Now, it's a qualifying child under age 17. Again, a lot of folks get this confused because if their child is 17 that year, if they were 17 early in that year, and they were saying, well, they are supposed to get this credit. But when they say under age 17, it means that they cannot be 17 in that year. So if the child, and I've got so many clients who's always very confused and a little upsetting because they don't get the child tax credit because their kid is 17 within the tax year. But when they say under age 17, you can't be 17 in that year, anywhere in that year. Okay, so you have to have a qualifying child. The child has to have a qualified, a good valid social security number to be qualified for this credit. And there has to be a relationship. The child has to be your son, your daughter, a stepchild, a foster child. It has to be either a brother, sister, niece, nephew. It could be a stepchild. It could be a stepbrother. All the stuff, you have to be qualified. So this is the thing. It's not just anyone can qualify you as a dependent. It can be a qualifying dependent unless there's a relationship involved. And a lot of people get this very confused. Again, they get so upset when they find out that they cannot, even though they will help to support these dependents, they can't claim them because they're not a qualified dependent. Okay, so the dependent has to also live with you for more than half the year. Okay, so they could be there 6 months and 1 day. That is absolutely perfectly fine, but they have to live with you for more than half the year, and they have to be a U.S. citizen or a U.S. national and or a resident alien. So this is what makes your dependent qualified. Okay, so a lot of folks, again, like I said, they get very confused about this qualifying dependent. But you have to, the dependent has to have these criteria, and unless that is the case, you won't be eligible for the credits. Okay, you just will not be eligible for those credits. So again, this is a child tax credit, and this credit is up to a maximum of $2,000 per child, and $1,500 of that is a refundable portion of that child tax credit. So again, you have to have a qualifying child. You also have to have some earned income, not a lot. $2,500 in earned income credit is great. You can still qualify for the child tax credit if you have a qualified dependent. Okay, so that's it for the child tax credit. We're not going to get any deeper into that. Just basically what qualifies a child. The age limit, super important. Under 17, that is super important. And then you must have at least $2,500 in earned income, you know, and that can be from self-employment income. It can be from a job. As long as it's earned income, that qualifies you. And the maximum credit is $2,000. So when it was COVID, that credit was like $3,600. Everyone loved it, but it went back down to $2,000. Okay. Now, let's move into our second point. So, hi, Cognac. Thanks for jumping in here. Hi, daughter. Hit like and share on this video, guys, that everyone get this information. We're talking about tax credits that you may qualify for in 2023, okay, for 2023 filing. Now, the second credit, child care credit. If you pay someone or you pay a daycare or any institution, child care place for care for your dependent, you can take a child care credit, okay? Now, what qualifies for child care credit? The child has to be under age 13. Under age 13, for some reason, they figure if they're 13, they could take care of themselves. I guess that's so. But under age 13, you can claim that dependent, and or if the dependent cannot take care of themselves, so it's a disabled dependent, there is no age limit there, guys. There's no age limit because someone has to take care of that dependent. So there's no age limit if the dependent cannot take care of themselves. They have to be under age 13. And for the institution, if it's an institution that you take them to, a child care or daycare, you have to be able to get this person's identification number or social security number, their address, their phone number. This information is necessary or you cannot claim that credit. Okay, so you have to get this information. So if it's a friend or some family member and they are taking care of your child and you pay them, you need to use their social security number. It's okay. They don't have to be a licensed daycare or child care, but you just need to get their social security number, their address, and their phone number and put it on the child care credit form. That's it. You can still claim it. Okay, so it doesn't matter. They don't have to have a licensed daycare. You can still claim the credit. Now, you have to make anywhere from $15,000 to $43,000. That depending on how much credit you get. So they allow you anywhere from 20% to 35% off only $3,000 per child and $6,000 if it's 2 kids. Now, there's something about this $3,000 per child and child care credit. Now, all my clients are paying. Some of them are paying $1,000 a month. You know what I mean? $500 a week. Child care, when I was paying for child care credit, that worked. But now child care credit is 4 times more than the amount that they max you out at. So it's only $3,000 per child, $6,000 for 2 or more. You know, and that's the number that they base the credit on. So for instance, if you made $15,000, let's say, and you at the 35%, which is the maximum amount of the credit that they'll give you, you will get 35% of the $3,000, which is $1,050. That's your credit. If it's 2 or more kids, $6,000, you'll get 35% of that, which is $2,100. You know, that's not bad if in fact you're at the 35% bracket. Now, if your income is around $43,000, it's only 20% of that $3,000 you'd get back as a credit, which is $600. And if it's 2 or more kids, that's $1,200. Okay, so again, it is based on how much money you make, of course, what the percentage of the credit is. The maximum credit is going to be $2,100 and or $600 based on what you make. So that's it. And now I don't care how much you pay the child care, how much you pay anyone to take care of your kids. They only base it on $3,000, right? Which is nothing these days. Okay, but everyone pays a lot more than that. So that's the second point, the child care credit we want to talk about. So guys, hit like and share again. Risha, Utah Smith, good afternoon. Thanks for jumping in. Hey, Lorna, thank you for those hearts. I love them. I love them. We're talking about tax credits you can qualify for 2023. The second point is child care credit. And let's go to the third point. This one is so exciting, and I always love talking about this one. This is the earned income tax credit. And this credit is so huge, it could go up to $7,400 on this earned income tax credit, guys. So let's talk about this credit. And everyone, again, look forward to this credit. You literally can claim this credit even if you didn't have to file any taxes. Let's say you have earned income credit, earned income, but it wasn't enough to file taxes. But you can file earned income, file your taxes, and claim this earned income credit. Okay, so The thing about it is you have to have earned income. You have to have worked. You have to have worked. And again, self-employment is work. A job, W-2 is the work. Those incomes still qualify. And you have to make under $63,000. So if you make too much money, this credit is not for you. If you make under $63,000, you can get this credit. You can't have any investment income over $11,000. Investment income meaning invested in rental properties or stocks or what have you. You can't have made more than $11,000 an hour. You will not be qualified. Okay. Have to have valid social security number for your dependent, guys. Has to be a U.S. citizen, resident alien, and a qualifying child. Again, they must live with you for more than half the year. We have to get this right. Again, 6 months and 1 day or 1 hour. That's still more than half the year. And so you have to have paid more than half the cost. This is what gets a lot of folks. And you know how many people claim earned income tax credit, they get audited, and then they wind up owing all that money back because they have to prove these two things. They have to prove that they pay for more than half of the expenses of keeping up a home. This is your mortgage. This is the rent. This is the insurance. This is food. So more than half the mortgage, those expenses to keep up a home, you have to have. The dependent has to live with you for more than half a year. And they have to have the valid social security. So there's these qualifications that you must have. And if you don't meet all of them and you get audited and you can't meet all of those qualifications, they will reverse that refund and then have you owing them all this money back. Okay, so this is what you have to know before you take this dependent credit. So many people have a tax problem now because they have had earned income credit tax just reversed and they wind up owing all this money back. So you can also claim the earned income tax credit if you have no dependent. So there's a credit that you can get without a dependent, and you cannot make any more than, say, $17,000 for 2023. You can get up to $600 for earned income credit without a dependent. So for those of you who, let's say the dependent may be a little, I'm not so sure that all my qualifications meet, I'm not, paid all the expenses for keeping up the home. I'm not sure that they live, if you're not sure, you could take your earned income credit, $600 you can get for just yourself without a dependent, okay? Now, if you have one qualifying child, you can get up to $3,995. And if you have two, you can get $6,604. 3 or more is up to $7,430. Now, I wanted to say something about these credits. So many people think this is what they're going to get. I have 4 kids. I'm going to get $7,400. My friend got $7,000. Why don't I get $7,000? Like everything else, guys, it also depends on your earned income. So if your friend didn't make as much money as you, their credit is going to be higher than yours. So do not compare. This is the problem. Because they got $7,400 for 3 or more kids, you may only get $4,000 for your 3 or more kids because you would have made more money than your friend makes. So the way the table is set up, the more money you make, the less the credit is. The less money you make, you get more of the credit because it's designed based on your income, right? I have to make this clear. This is always confusing, and so many people get this wrong. It's based on your credit. So do not compare your taxes with somebody else. If they come up and say, well, I got the $7,400, and you call me up and say, why didn't I get $7,400? Simply because they didn't tell you how much money they made, but you would have made more money than they did, or maybe just not enough money, all right? So this is the key thing about the earned income tax credit I want to make clear. So those are the 3 credits I want to discuss today. Hit like and share on this video. Let everyone get this information. Super serious information for people who get this credit because they get it confused every year, right? There's a whole lot of explanation on these credits. So let me recap these credits here, guys. The first one is the child tax credit, and your child have to be under age 17. So a lot of folks lose the child tax credit and they wind up owing taxes or maybe not get as much refund. They want to know why. I still have my dependent. What happened? Well, how old is your dependent? They turned 17 last year. You no longer is eligible for the child tax credit. So that's why you lose that credit, right? So then the second point is the child care credit. And the child care credit, guys, if you have a child that's disabled, there's no age limit. However, if not, age 13, that's it. So there's no more child care credit if the child is over 13. So it's 13 and over, you don't have to pay for child care. The government said no, send them to school. I mean, they're in school, no child care. They can take care of themselves. You don't get any credit for that. Again, the credit is based on your income, anywhere from 20 to 35%, and it's only based on $3,000 worth of child care that you pay out, which is absolutely nothing these days, right? But the maximum is $3,000. And the third credit here, guys, earned income tax credit. This is really super great. This is the one where you don't have to have worked and make a lot of money. Self-employed is eligible for it. And it all depends if if you have a qualifying dependent, based on where your income falls, you can get up to $7,430 on earned income tax credit. Okay, so that's it for my 3 credits today. You guys hit like and share on this video. Make sure everybody gets this information. And of course, if there's any other questions regarding any of this stuff, guys, it is tax season. Proby Tax and Accounting is open. We open all year round, actually, and you can give us a call at 323-290-9034, and or you can go to our website, set up a 15-minute free consultation if you have any questions about any of this stuff, any of your tax issues. It doesn't have to be about these credits, but anything that you need to know. Set up a free consultation, 15 minutes, and I'll be happy to talk with you guys. Okay, so go to our website at probystax.com and set that consultation up if you have a question. Right. So with that said, that brings me to, where are we? So every Tuesday and Thursday, of course, you guys keep your notification on like you normally do. And then we're still going to get you that information at elainesdesk.com so that you can get all information about the businesses, staying in business. I've read so many comments online in all these business groups, and so many people are having issues in trying to keep their business going. So I want to talk about a lot of different ways that you can keep that business going and staying in business and be successful at it. Okay, so this is going to be super important, very interesting again for those of you who are operating a business. Okay, so stay tuned to elainesdesk.com for that information. Now this is Thursday. So again, we're looking forward to a wonderful weekend. I want to make sure that you guys have a great weekend. We'll see you back here next Tuesday. And with that said, you guys take care of each other and take care of yourself. Thanks. Bye-bye.